Hello, here we are with Dr. Redouane Elkamhi. Doctor, welcome to the Defiant podcast. I don't know if I should call you Dr. Redouane, Dr. Elkamhi. How do you prefer?
Go with red one. It's easier. And red is, for anybody, is red as a color and one as a number, red one. That's the easiest one to remember it. Awesome. I'm happy to be here and hopefully we add some value to your viewers. And I'm excited about this.
Yeah, likewise. No, very interested about what you're building. So let's just start with that. Let's briefly get everyone on the same page on what GOAT is, and then we can kind of start diving more deeply into the details. But just very briefly, an overview of what it is.
Well, GOAT is, I think, in a nutshell. First, we go big picture first, and then we can narrow it down later into each detail. Go generally, what we're trying to build is a project that tried to build a Bitcoin-based financial market. If you think about it in a nutshell, you say this is going to be specialized Bitcoin for now. It's a Bitcoin, but decentralized market. Well, what's unique about it? Well, because we're thinking about secured in BTC, paid in BTC. Means if in a one sentence type, what is GOAT? GOAT is a market. It's not a market of vegetables, but it's a market of BTCs in which you get paid in BTC, not in any different other token. And it's a decentralized at the core, and it tries to add value to different type of users. And we can dig deeper into what type of users and other things. But generally, this is what I want anybody to leave the meeting with is what is this all about? It's about a BTC financial market layer 2, if you want to call it. And there are distinctions in layer 2s and what type of layer 2, and that will be a detail. But at the end of the day, if you're a user of BTC, smaller, miners, whale, have different risk aversions in terms of what security you would like to have and what type of risk you would like to take, you think, oh, I have a choice in what type of risk and what type of reward that I'm going to take. I have a choice to be in a financial market that is inherently trying to get the Bitcoin security, getting paid in Bitcoin, not in anything that may drop to zero and you have nothing. And it's only for the BTC holders. Hopefully it's clear.
Yeah, definitely. Okay, and then I know that different teams, CKM and Midas, are involved with GOAT. So it would be great if you can describe what which those teams are, like what is CKM, what does Midas do, and how are they linked to GOAT network?
I will say one is linked, one is history to start with. But it's almost like you think of GOAT right now, ZKM and GOAT team is one team. It's the GOAT team. But it's important to create this distinction since you asked. Because some I have established over a year and a half ago, and some just people are starting to hear about it. And it's important to see that we have two streams of works going together within the same umbrella. It means if you think of us, think of an umbrella called GOAT. This is the financial market. But a financial market needs an infrastructure. It means if you build in something, you need an infrastructure in place, and you need a market and economy in place. ZKM, think of it as the infrastructure team to build the foundation for which we are building the economy. GOAT started with this part of infrastructure and trying to build the financial market. And as a first stage, we're doing it for BTC. It's just for the sequence. GOAT now is building a financial market for BTC based on some infrastructure. But the infrastructure, there is a team building it so that later on when there is BitVM, later on when there is other things, there's an easier connection with those guys. And that's how we structure our business. In fact, this is normally, professors talk too much. Sometimes I feel like I should shut it down to small sentences, but I want to tell a word out there and then I will stop. I think the last decade and a half, in my view, was a lot on infrastructure. People were actually very, very obsessed to make things really, really quicker, bigger data, taproot, this and that for Bitcoin. Other people tried to develop something in smart contract. Means in my view, and I was in this field for a long time, 90%, 95% was on infrastructure, on technology, and 5% was in economics. My prediction in the next 10 years, you're going to have 50% economics because it used to be just Alice sending money to Bob, Bob sending money to Alice, Bob and Alice, Alice and Bob. Now you have multiple parties that are going to be available in L2. You have rollers, you have sequencers, you have validators, you have challengers, and now different stakeholder with different incentive require a solid economy. I think GOAT, in my opinion, distinguish itself today as we are thinking of the economy, but infrastructure is just a mean to the end. And that's how we stay nimble to add whatever it is, and we have an infrastructure team. And I promise I'll stop after this. It was a bit too long of an explanation.
No, it's perfect. No, it's great, and you explain things very clearly, so that's very helpful. Okay, so I understood CKM is the infrastructure for GOAT, and what's special about it is that you've created a way to communicate with many different blockchains, and also for those layers to communicate among each other, so they're interoperable.
Yeah, in a sense, in a nutshell, yes.
If you can explain how Metis fits into all of this.
Metis incubated. Metis actually started in 2021. It's on Ethereum. That's a different thing. It used to be number 3 at some point in terms of TVL, I think 2022, 2023, but they incubated the ZKM. ZKM was incubated out of Metis, part of the team, but this, let's say the ZKM now and GOAT are, and I'm not saying 100% separated, because there are some people that founded Metis that are actually the co-founder of one of the co-founder of GOAT, but I will not say there is any relationship in terms of work or research, because the environment, number one, is different, and the goal is different. And that's only my honest opinion on this one is that if there is a need for a financial economy, it must be needed more for BTC than for Ethereum, in my humble view. But that's a personal view.
Well, actually, that was my next question. Why did you decide to build on top of Bitcoin first?
I'm gonna give you. Do I want a Michael Saylor type of answers? Because he's the king. I think my answer as an economist. Remember. I heard a lot of teams when they talk about this, they say, I want more transactions. We need more transactions so that you actually can give more money. In fact, this is not how you start economics, in my view. In my view, you start what value add you're trying to present to the users. And the way we're starting to think about it is not because it's the king. Actually, it is the king, and I love the infrastructure, and I spend a lot of time on it, and we didn't have to introduce. Actually, I was an engineer before I became a finance prof. I was an electrical engineer in the past, working on code in assembly line, and we may get to this at some point, how things come back always full in circle. That's why I kind of believe much in the technology of Bitcoin first. The reason is, what is the main holders of Bitcoin right now? Bitcoin, everybody so far thinks it's a digital gold. Okay, good. It's gold. Why? It's good. It's a good store of value. We can keep it. What's the business use? Speculation and leverage. I think you may agree to this. Keep it. It's a passive asset. I hold it. Even the ETF, as soon as they approve it, they tell them, look, there's no yield generation, put it in Coinbase, and don't compete on yield, compete on basis point. It means the idea of using it to generate yield wasn't even there. And anybody who has Bitcoin expect an increase in price, and they don't want to do anything with it because they worry actually I don't want to convert it and I lose market risk. It makes sense, actually. It means we started from the idea, Camille, of what are the users? And we say the users are different type. There are the whales, there are the small users, there are the miners. Well, how can we create an economy? Because that's not the case actually for Ethereum. Ethereum is a smart contract language I don't think of Ethereum and Solana as a store of value. I think of Bitcoin as a gold store of value, but there's a beauty of it, it's digital. And because it's digital, that digital word has not been used enough. The gold part has been used enough, and there is good adoption, and many people are holding it, fixed supply, and there are going to be some forking in the future, and future going to make supply even smaller, the relative supply. And we're not going to have a lot of subsidies, and prices may go up, and they just wait. But not everybody has 1,000 Bitcoin. Some people may have half, have one, and they want to have yield on that Bitcoin. And some miners have been hurt so much recently by the FTX and the other things. And they come up to you and they say, well, I want, but I don't want to take risk. Can you find a way to generate sustainable yield? This is actually sometimes how Go differentiates itself, because we talk about the word sustainable. We want sustainable yield in BTC. If you're a miner and you think into, okay, I think this will require less than 30 seconds, but just to give the audience a view. The subsidy of miners, for example, right now is getting smaller and smaller. But in terms of dollars, it's the same. It's almost a little bit increasing because Bitcoin have appreciated in value, and there is if you convert the subsidy in dollars, actually they are making still okay money. Well, wait a second. If these people believe that the price of BTC is going up, what do they do now? To upgrade their machines, to do anything to their machine, they have to sell the BTCs in order to actually do it. We come into them and say, look, you want to still stay in L1, but probably you can finance your CapEx just by the yield you're going to generate out your BTC, while BTC is still going to be in your L1 for now. And the metric for me later in my phase 1 of the project, because we have phase 0, phase 1, phase 2, we can talk about them. In our phase 1 of the project, my metric is how many of those will finally trust us and move to L2. But I want to tell them that you can still make money in L1. And you don't have to sell your BTC because you're a believer that BTC goes up. Because if they don't believe BTC goes up and the subsidy is going down, how can they finance themselves? It means it's a net margin. It's not going to make enough money. That's why I think for miners, for example, a collateral lending based on smart contract, based on generating yield that is sustainable, and we can chat about how do we generate yield sustainably, makes sense. As small users, how we distinguish ourselves. I don't believe in centralized sequencers. When we start this project, one of the things really interests me the most is the fact that we don't have a central entity in sequencers or all. Even now, even the chain as it's going to go now, phase 0, we already did the implementation of decentralized sequencers. What does that tell you, Camilla? Sorry, not what that actually tells you? Tells you that, okay, now you as a locker of Bitcoin, suppose you have one Bitcoin and you decided you want to earn some yield, and you make a choice. Are you risk averse or less risk averse? If you're risk averse, you say, oh, I'm going to stay in L1. I'm going to still lock in one of the sequencer. And by the way, there's not only one sequencer. There are many sequencers. What's that creating? It's creating an open market of sequencers. And that's key. Because if you don't have an open market of sequencers, me as a sequencer, what I'm going to do, I'm going to take a lot of service fees. I'm going to give you little. But because there is a market of sequencers, if I don't pay you enough, the next day you're going to say, I want to be a sequencer myself. And we allow that. We have an open, it's almost like, think about it, like Bitcoin. If you have a laptop, you can connect it anywhere else and you become a miner. In Goat Network, you can be a sequencer if you have a certain level of Bitcoin that is not crazy. It's actually reasonable. You become a sequencer by tomorrow. Now it's whitelisted because the system still need to operate. But in a sense, to a nutshell, again, to summarize just for the one sentence things, we believe in heterogeneity of investors in Bitcoin. Bitcoin is a store of value that is digital. The digital aspect has not been utilized enough. And we think by allowing different heterogeneous investors with different risk aversion, different need to basically operate in the system, this creation of value for those guys are unique to our ecosystem. Because we are decentralized sequencers for which you can earn gas fees, even if you have one Bitcoin, or if you have a 0.1 Bitcoin. If you have 0.1 Bitcoin, now you can earn gas fees in BTC. You don't need to have 1,000 Bitcoin in order to come in and create a sequencer. Because as soon as you lock, and I'm telling you, you have a choice. Would you like to be in L1 or would you like to be in L2? If you like to be in L1, it's going to be lower yield because less return. If you want to be in L2, you're going to be, but also there's slashability because if you behave badly, then we slash you and there's fractional slashing. But generally, we believe BTC nature of digital gold allow us to do this market. We believe that the nature of investors are different from the nature of investor in Ethereum. And because of this nature in terms of what type of miners, because they have machines, they have CapEx, they have things, users, they rank from small one to long one. This creation of heterogeneous investors and heterogeneous need create value in our network with lower fees. I didn't have a chance to talk about lower fees, but maybe we can talk about it later.
Super interesting. So do you believe that your main users will be Bitcoin miners?
No. I said, if you only have one type of users, you don't create value. The heterogeneity that matters the most. I actually like the idea that small holders, because how do Bitcoin even increase? Because you have more adoption. How do you create more adoption? Even in the stock market, let's take the stock market for people. You have some investors who like dividend stock and some investors like growth stock. Would you agree? Now there's no dividend stock in Bitcoin. You don't earn any. There's no choice for the person who holds in 1 Bitcoin or zero point 0.5 Bitcoin to earn anything on it. And they say, well, if I don't earn anything on it and I need some type of income, it's very complicated for me. I need to go there, change it. I need to take so much risk in BTC, wrap it somewhere else, change it to Ethereum. Now I'm telling him, wait a second, or I'll tell her. Even if you have 0.1, you can lock it in one of the sequencer. And what is the fees paid for us? The fees is paid in BTC plus Goat Net. It means you are going to be able to operate a network with 0.1 BTC. And you're going to earn yield on that 0.1 BTC. You don't need to have 1,000 before you can start playing a stakeholder in the system. It means I do believe that the heterogeneity of investors is and allowing different risk averse to earn different things, that create a big market for us. Because decentralized sequencers, I want the audience to think about what is our L2 look like. L2, think of it, you have many sequencers, like you have, let's say, 7 or 8. And for now, let's not complicate things by saying there are rollers, experts. Let's just think of phase 0, which is simplified. You have only 7 or 8, and you come in as a user and asking yourself, you want to take some risk or not? I say, no, I want to stay in L1. I want to lock it in L1 in my own script, not anybody else. And I can only myself withdraw it. I'm going to say, look, you have a chance to earn in BTC by doing what? You basically lock it to one of the sequencers. You have to choose one of the sequencers. And the choice of the sequencers will depend on how they reveal themselves as being good. Now, that's the part is key. That's what I was telling you. The next 10 years is going to be on economics, not just infrastructure. Because you need to allow competition across sequencers. And that's the whole idea of Bitcoin, is decentralization. If you have decentralization, you have competition. And if you have competition, you have more fees to the user, more rewards, to the users. Because they're going to distinguish themselves by saying, look, come to me, I'm only taking 10% of your service fees by operating, and then you're going to get the rest of the reward. But then suppose you're going to say, no, that's not enough for me. I'm going to earn 3-4%. I say, maybe not enough for me. Maybe I'm going to take a little bit more risk. Well, why you take it? Why trust their security? I'm not even talking the BitVM era and the entangled rollup era. I'm even talking today. Like on September, we're going to launch. You can just say, look, I'm going to go to L2 and I'm going to lock somewhere. Again, if you lock it there is no time of locking. Basically, there is a tokenization of those rewards, and that's a word that is important. We are tokenizing the fees that is earned by sequencers, and that's the reward that any person who lock in one of the sequencers will get. And by getting that, and we call that YBTC, why? Because it's the Y stand for the yield. It means a BTC that is earning yield, and this yield is in unit of BTC. And I wish I didn't repeat it enough, because I was hurt by this in the past in my own investment, because you start earning yield and earning yield and earning yield, but you're earning it in cuckoo, and then cuckoo end up going to zero, and then you have nothing. And then now, that's why I'm hammering this point a lot. If you tell me you're making 20%, 50%, as some people come, well, tell me 50% in what? In what unit of measurement? And I'm telling you, in our network, you earn it in a unit of BTC.
These sequencers, what is their role? They are, in essence, connecting Bitcoin layer 1 to the layer 2, right?
In a nutshell, for people, think of it as phase 0. We build the economy for different investors. These different investors can lock their Bitcoin in L1 or L2. If they lock it in L2, they have more reward in L2. The reward is in BTC, is not in Cuckoo token. That go to zero at some point, but you earn in BTC and run away. It's tokenized, which means you can use those yield-bearing tokens now, yield-bearing BTCs, and use them in the whole ecosystem with the development. And it's a market that is based on decentralization, is based on sharing reward of sequencers. It's based on open market for sequencers, and anyone can be one. And we don't need many stakeholders, and that's why we want to build an economy that way first. In phase 1, we're going to build a true an inheritance, let's say 100% inheriting the Bitcoin, because we have all the tools necessary for doing it. And keep this motto, hopefully some people agree, and is that the next decade will be 50% of economic theory on the layers. The last decade was 1% to 2%. The next decade will be hugely equilibrium Markov structures and equilibrium economics on it.
So for phase 0, which you said you expect to launch in September?
I think now it's in, I will say testnet for now.
Okay.
And then I will say by the end of the year, we'll probably, by the end of this quarter, Q4.
Q4, okay. With testnet, will that be open to everyone?
Yeah, I think.
So September testnet, open to everyone. And then the main use case, I understand, is to stake or deposit Bitcoin either in layer 1 or layer 2 to earn yield on that Bitcoin. Obviously, layer 1 yield. Yeah.
That's one business case. That's one use case. I was just, but we're going to have, I can give you another things that we are developing internally in that world. I don't know how much, I want to talk more about traditional finance called the term structure of interest rate or the term structure of, for example, let's just take this one step further. Since we're going to earn those yields in layer 2, what do? We do like what Pendle is doing. I think you may be familiar with Pendle. Pendle decompose the yield into two components. Bet in on yield or bet in on or basically the principal and yield. Mm-hmm. And we have those markets. What is unique about us then, it's going to be sequencer specific because how much the reward is dependent on how much the sequencer getting chosen, correct? Mm-hmm. And the sequencers may lock for 3 months, may ask you to put it for 3 months, may ask for, like the sequencer depend on, that's going to be, no, sorry, I correct myself. It's not the sequencers that is actually asking for, you may actually earn yield for multiple months because you keep your, and then we want to decompose it. And now you have a market of yield alone and a market for principal alone. That's business use number one. It means we have a term structure of zero coupon. I don't want to use the traditional finance terms here, but because these are not, basically you can have two different markets, one on yield, one on principal, that are sequencer specific. That's one use. The second one also that we have in L2, which actually we try, and that's actually, I'm really excited about this. This is actually as somebody who worked in this field now quite a long time, I get asked this question a lot. Why are you guys, is people building casinos only, or are you enhancing anything better than what traditional market has? Mm. And for example, collateral lending for me, when I was talking about the miners, or I was talking about, if you have BTC and you believe it's going to grow and you don't want to sell it, but you want to, let's say, borrow based on BTC. You want to have a collateral lending based on BTC. What is happening today in traditional market? Camila is a bank, Redouane is somebody want to get some yield, want to get some loan. I come to you and I go, okay, I'm going to deposit like my house, take it as a collateral, you give me some rate, I write a contract, the contract has some covenants, and you're going to follow me if I'm going to breach those covenants or not breaching the covenants. Or I can deposit some treasury to you, but you can do whatever you want with treasury. We call that rehypothecation. Basically, you can take that hypothec and you can, in our world, because of visibility of transparency of smart contract, me as a borrower, I know what you're going to be doing with my contract, with my BTC. And because I know what you're going to do with my BTC, it's going to help me now if you're going to use my BTC for staking. Suppose I give you 100 BTC and I'm asking you to give me a loan. You give me a loan, let's say XYZ dollars. But if you're going to use my BTC for the sequencers or to earn some yield, what it's going to do to the interest rate I'm paying you? It's going to reduce it. Mm. Now I'm taking advantage of the rehypothecation visibility that I have on the blockchain that I don't have in traditional market. Traditional market, you may have contracts on that. But that's why I said in the beginning, it's a BTC-based financial market. Because I want to inherit the transparency to create value. Because if I'm just mimicking what is happening in traditional market, there's no value in my view.
No, there's no
value. We're just creating casinos. But I cannot go to the bank and I follow what they do with my treasury and I write a contract. Now I know. You use it for staking and you earn 3%, my interest rate have just reduced by, we share it in between us. Okay, you give me 2, I give you 1. You know what? We're going to have a rent. We call it like rent sharing on that one. And that creates value.
The idea there is for others to build out this DeFi ecosystem? Or are you building the initial use cases? Okay, there's other teams building different DeFi protocols.
Both. I will say my hope is the many they build, the better. You don't want to build like The many developers that come, the better. And that's actually our hope. And in fact, as I said, if we have an open market of sequencers, just take for a second, have an open market for sequencers. For every sequencer now, you have a yield-bearing token, a yield BTC, because they generate yield. And each one can be decomposed into two. And you have a market of those two for different term structure. I prefer that having many builders, including Pendles, which we're actually with discussions with them, to build different things for different sequencers. That's my hope. For collateral lending, same thing. We provide all transparency, and we also provide, because some of the areas I know it quite well, I can talk about it, but I think the project is allowing this possibility to build others to build on the top of what we have in place.
So a lot of these use cases, we've talked a lot about yield and splitting yield and so forth. Is based on having yield in the first place, right? So where is this coming from?
Exactly. What the yield? If you have any transaction in the system, you pay. The sequencer is going to transact. You as a user, when you have a transaction, think of it, any transaction that happened in the network, you are paying in BTC in order to do that transaction.
But where will those transactions come from? Like, why would somebody be incentivized to be transacting on the network right now? Because there's like nothing there yet, right?
I will say that it's a good question. That when you build the infrastructure, which we have, and we have these applications, for example, like if you tell me, well, how are people going to come and invest and trade in the yield? Well, that's a trading activity. When people have a prediction market and they come and they do a prediction market, they actually trade on the prediction market. They pay fees on it. Like for now, the ecosystem, for now today, if you have a BTC, you can't actually do anything with it that is secure. We are building those development, not only us, but other partners with us. And the more apps we have, the more development going to be happening, the more people will actually come. And the question is why they come to us versus not coming to others. Well, now remember, if I come to a place for which there is only one sequencer taking all the reward, I can't get anything. And coming to me, you actually had a promise as a developer to be entangled rollup. This is where it comes in the phase 1 and phase 2. If you develop something for us, you basically don't need to go and develop it again for Ethereum, for Ton, for other people, because my rollers are actually speaking with other rollers. Now, that's a strategic incentive for developers. You know what is it? Upgrades or changing environment. You build in Java today and you want to go to a different environment and that doesn't support it and you're stuck, you have to build from scratch. But I'm telling you as a developer, our phase 1 and phase 2 are not a dream because the white papers of Entangled Rollup and ZKVM are available, and that's how we even started. It means our core mission is to have a universal L2 for different L1s. It means when you develop within our system, you're automatically now connected with different other systems through the Entangled Rollup that we actually do. Now that's a mission that not many can say. Now, the white papers exist, and I invite everybody to go, like the white paper for the ZKM Entangled Rollup and the white paper for the ZKVM are available, new and old, on the ZKM website. Also, the white paper for GOAT for like what neuro infrastructure we're using for phase 0 is available. And there is also an economic paper, which is actually around 40 pages long. Sorry, but the executive summary will basically explain it. The executives talk about the economy. It means your question is fantastic. You need something to distribute something. If you have nothing, you distribute nothing. I'm telling you, you have the incentive to come to me because number one, you get shared reward when you come to us rather than one sequencer having the whole thing won. But you still can ask, but how they even come to first place? Maybe you have no transaction. I'm telling you, a developer making a choice. Can I be stuck in one network or can I have a universality? Because it takes time for building. If it takes time for building, I'm telling them, look, come to me, build, and my phase 1 and phase 2 is a phase 1 that is going to be a universal L1 for many L2s. It means it's all strategically, hopefully well designed. And look, we're learning from what others are doing too, because this is the magic of technology. You have to stay nimble. When something happens, you add it. Something happens.
Okay, I see. So the goal is to incentivize developers and builders to come to Goat because number one, sequencers will distribute their fees, and number two, that there will be an interoperable ecosystem when, so you're not going to be locked into a single L2, but you'll be able to deploy across many different chains in the future. And so the idea is that, by incentivizing these teams, you'll get different use cases and dApps and protocols on Goat. And so with that, you'll get users will start transacting, that will create transaction and fees, and that will generate yield.
Exactly. Actually, you said it perfectly. There's one little addition is do not minimize the open market competition. Because if you had monopoly or oligopoly within sequencers and rollers, the cost of monitoring become too high, and then the fees all distributed into monitoring everybody. When you have an open system, because that's actually fundamental that I've not seen in any L2. I'll tell it to you in less than 30 seconds. Let's say a minute. Like in finance, for example, we believe in adverse selection a lot. We work always on the idea that there are some bad people, there are some good people, and maybe it's bad, maybe it's good. I don't know. We call this adverse selection. Well, let's write a contract on the middle, or maybe a little bit lean toward bad. Okay, and then this has a cost, because if it's bad, I need to charge a little bit more interest. I need to. Actually, in blockchain, it's one thing is crazy. You assume everybody's bad. Assume everybody's bad. What's the cost going to be? Infinite of monitoring everyone if I'm a central entity. I'm if a federation and I want to... But you know what you can solve this problem with? Again, is the genius of Bitcoin, in my view. And that's what we inherit, is the idea of having an infinite monitors. I don't even have one bank monitoring one loan. Everybody in the network now is incentivized to monitor so that they kick out the bad behavior. How do you do that? By allowing decentralized sequencers, decentralized rollers, and allowing everybody to become one. Because as soon as you behave bad, I can be one that compete on you. And I can attract lockers to me. And the more I have, the more I can be chosen, and you will be dead. Then you have incentive to obey. Because whatever you said was correct, except the idea that to make it an equilibrium, you need equilibrium incentive, and you need challenges and penalties from the system, not from one doing it. Because it's too costly for one to do it. And that's the essence that I started this meeting with you on a podcast, sorry to me, saying in the next decade, it will be more about economic thinking. Infrastructure is necessary, but it used to be two players, Mrs. Alice and Mr. Bob. Now you have stakeholders, which is rollers, sequencers, validators, challengers, different type of users. You create conflict that have different conflict of interest, different MEVs, different type of thing that they can control. If you don't build an open market that is competitive, you live for 6 months and you die after, because the incentive kills that. We make 100%, 20% because only few, but after that, it's not sustainable.
Yeah, no, that makes a lot of sense. Can you talk about your tokenomics? I read some of the information that's already been disclosed. I think there will be, some tokens reserved for an airdrop. Some are for the sequencer mining purposes. I read that there will be a total supply of 1 billion gold tokens. I don't know,
I think it's going to be, first of all, it's not inflationary or deflationary, because we use them. It's almost like Bitcoin. You know exactly the total supply of token that is going to be available. I'm very, very clear about the economic component, but the numbers may not matter much because you can always divisible it into free.
Sure.
What matters is how much you're going to give to the sequencers. But you know why it matters, and it doesn't matter that much. If I was just paying you in GOAT token, it matters hugely, because you need to know exactly what's going on that GOAT token prices. Well, it's still going to matter. I just don't want the audience to take me like I don't care about it. No. But you are paid in BTC too. I don't want this to be lost in translation, because this question for someone else will be fundamental. How are you going to manage to have the price of token to be good? Because you're only paid in that cuckoo token, or you are paid, you are generating yield. What is on in the system is actually BTC. I want the BTC holders to know this clearly. Now, Goat token exists because if you mine and redeem, you're going to have Goat token. We're going to incentivize to generate blocks. Around 40% of those token supply is to sequencers. Now, the difference again, sequencers, 40%, is not to 3-4 people. Is to anybody who actually deposit or lock will earn these tokens. And the token is for boosting yield. The more token you have, the more yield in BTC you're going to make. It means Goat token has this ability to boost your yield and boost your yield, one. Second, it also boosts the chance to get chosen. If you have a 50 sequencers, I told you we're going to start with 7, the project will start with 7 first to make things work, and then we open it. The likelihood for being chosen doesn't only depend on how much Bitcoin you have, you also depend on how much Goat token you have. It means the combination of the two, there is some probabilistic equation, think about it, that will choose how much this and how much that. It means you have incentive to keep Goat. It means there are 3 components. Goat supply is fixed. It means I think we inherit a lot from Bitcoin. One of them is the open market, and anybody can be a sequencer, anybody can be a miner in BTC. Limited supply, and the Goat token going to help us boost in reward in BTC and also boosting the chance to get chosen to get reward. This market, Camilla, I think there is a lot of misunderstanding, in my view, what L2 is doing, in my view, because many people are confused about it because they take Ethereum and they just superpose it to what's going to be in BTC, even though I think, in my view, on my reading, in fact, the term L2 started in BTC before Ethereum a long time ago. L2s have different functions, different use case. But what are you trying to create in terms of security and scalability and interoperability? It depends. And it depends a lot on what you're really earning. This is why, as a Goat project, this idea for us was very fundamental. The word of sustainable yield. We want a yield that is sustainable because we don't want to promise 50%, 10% for 2 months. We want to have an equilibrium that can be sustained, not by us spending so much money to monitor everybody, is by establishing the incentive for each one to monitor each one. And that's, I think, the number one distinguishing feature of phase 0. The number 2 distinguishing feature of phase 1 is that we have all the technology ready for BitVM to inherit all the security, which is the OCP, the ZKVM, and also the entangled rollup later, and the white papers are already available. This is really why I'm kind of excited about this. And hopefully some of the users, some of the audience will be excited.
Yeah, I'm sure. Okay, so for the token, the basics of it is that those who want to participate in the network by becoming a sequencer will have to stake Goat tokens and BTC. And obviously, if you stake more Bitcoin and Goat, you will get higher rewards.
You get higher reward because you get a higher chance to be chosen, and also you get higher chance to basically you put more at stake. It means you earn more. Just one clarification, because you said you need to have Goat, you need to have BTC. I'm even going to say one thing extra. If you can attract with your reputation without putting skin in the game, for example, suppose I have to put skin in the game for people to come and lock with me. But suppose you don't have a lot, but you can have a better service, better history of actually operating with never malicious activities. Then you'll be able to attract more lockers.
Oh, interesting. Okay.
The more people will come to you. It means that's what I was talking is the incentive part. It is not Alice send 1 Bitcoin to Bob, Bob return 1 Bitcoin to Alice. That was interesting, important, but we're going to move toward L2s, and I'm talking to anybody in L2. Economics is going to be foundational because you're going to have multiple stakeholders with different incentive and different conflict. And if the system is built with the same thinking as, well, you just have one, it's not going to work. And my humble opinion, look, at the end, I'm more wrong than I'm right all the time. we are learning this so much in academia because we get rejected in papers so many times, then we get accepted. It means and that's the beauty also of research, because we get upgraded and we try and we try and we try, and hopefully we'll.
So right now, for those who want to get involved in the Code Network, what would you recommend? Like I also read that you had a Code Club rewards program going on. Is that still happening? What if somebody wants to become a sequencer down the line? Or what if people want to start staking? Like, what are the next steps?
I think these are all good questions. In the future, okay, right now I will say there are links when you go to our canvas, are you going to see the people you contact to become a sequencer, because it's still whitelisted. If you want to participate in the GOAT, I think sorry, by the time we're making this call, I think it may have the GOAT Club probably finished. I don't know. This one, I need to ask to know exactly the time of that. And I will say, at some point, you don't need to ask anybody to become a sequencer. At some point, that's actually what we want it to be. You can be a sequencer with a certain threshold of Bitcoin at place. And by Q4, the system will be available. There are going to be some applications on it, and you're going to be able to earn sustainable yield both in L1 and L2. Both in L1 and L2. This is, I hammer it more because I know that the BTC holders today, the BTC are idle, they're worried to move to L2 yet, and I want to confirm that you can actually earn even in L1. How? There's a little bit details on it, how much, and things depend on the fees we generate, as you asked before. But I think this is still a possibility now for people that are really worried, not trusting anything called L2, because they have been also burned just recently, which makes sense actually.
Perfect. And then to wrap up, I would love your big picture vision of the future for both Code and Bitcoin, including the layer 1 and layer 2, is because you talked a lot about a financial system, which is a little bit different from, I'm very used to talking to many DeFi founders, people in Ethereum, people in other kind of smart contract chains. And the emphasis is a little bit different. It's, not just a financial system, but it's like Web3 and like all these different decentralized applications in general. But it sounds to me that, maybe you're seeing blockchains as more financially focused. Is that true? Like, where do you see Bitcoin, Gold, and Bitcoin layer 2s fitting in the future?
Multiple questions in one.
Sorry about that.
Questions in it. I think, first, the impression I may have given maybe stems also from my interest, not just. I will start by saying probably many that talk about decentralized, they're not actually decentralized sequencers at all. It means there is absolutely today, I'm going to tell you today, there is no L2s that have decentralized sequencers on the Bitcoin network. And there is no one that actually can claim that you can earn sequencer fees. There's no one. And I did the research on this one to this date, and we can stamp the date. But the reason I didn't talk much about the whole belief type of talking, because I don't view this as a belief or as a religion. Oh, you have to be, and we're going to go Web3, we're going to change the world, and the AI, and those are buzzwords. And again, because of my training, I try not to be just going with buzzwords, but going with what I see. In my view, and this is, I said it probably now for the third time, you definitely, what is these things all about? What is Bitcoin all about? It's a store of value, it's a saving. At the end of the day, you're not talking about constructions or talking about highways you're talking about something that has to do with store of value. It means it's related to finance. You have something that is already now accepted as not just some fraudulent things that people are using, but rather than possibly the future is going to be also designed as a numeraire on Bitcoin. I'm trying starting slow on this one. It means we are talking about something that is financial. Number one. Now, of course, financial drive behavior, and you can think of monetization of copyright, like you can think of other applications that at the end you're going to put the incentive structure becomes money, and because you have an incentive structure, you're going to derive behaviors. But I want it to be very realistic. For now, the problem we solve is not a belief or a religious problem. We're trying to solve one problem, that is, it's a digital store of value for which digital has not been used much in BTC. And for a good reason, Camilla, for a good reason, because things takes time. It took us many years before now the regulations is more nicer to the BTC holders. The ETF, it just been 11 BTF in January 10, I think, 2024, been approved. This is recent, and they approved with no generation of yield. If you just look back in financial sector, Camilla, you're going to realize also ETFs has been approved with no yield in the past. Gold right now doesn't generate any yield in the ETF because gold is not digital. But I'm saying to myself, look, I have different users with different incentives and different desires to adopt BTC, but some of them are not just into waiting forever or waiting for 3 years. They want to have some income. That's why the emphasis for me was, can I solve this simple problem? I'm not trying to solve a dream of something. I'm solving something concrete. For now, as a BTC holders, we have different type of BTC holders. Are they having a place, given their different risk aversion, to earn some sustainable yield? My answer to this is we had a lot of fiascos because many people come to the market, they ask you, they tell you you're going to generate 20%, 50%, 70%. It happened for 3 months, it get bankrupt, and you lose your money and you run away. We are trying as a team to emphasize the word sustainable. And we're trying to, that's why the focus for me for GOAT was this one. Now, if you ask me generally about the state of L2, I think L2 under Bitcoin will look very different than L2s under Ethereum, because the business case of Ethereum is different than the business. Ethereum is a coding language. To me, Ethereum is more, by the way, I hold both. It's not like again, it's not a religion for me for which I just have to hold one. I just to have one religion. I'm not mixing two religions. In a sense, I'm just saying for me, they're just two different words, two different applications, two different things. One have started as almost, I'm simplifying, a coding language. And from there, it has changed a lot for what it is today. Bitcoin is one of the amazing things that it didn't change. And it started giving this obvious thinking to people that it could be a store of value. Except for us to continue, we need to have some incentives for people to basically have some returns for what they do, not just speculation and leverage. And I thought this is the reason where Bitcoin is going to go in this aspect, more than, in my view again, more than, I know there has been some success in ordinals, some success in BRC20, some success, and we're going to have those in the network. But to me, those are short-lived, in my view. It's going to be short-lived because that's, in my view, not what you want to congest the system with, unless it's used for copyright, unless it's used for something that has real value, that has real word applications. For example, copyright, or for example, the idea that now we cannot distinguish something fake from something not fake, and we want to make sure that we bring that to the BTC to make it real. That's yes, because it has a real application. Except those, I'm thinking the business use that people are going to look for Ethereum, for Bitcoin layer 2, is can I increase adoption by increasing the number of people that come in to earn yield, not just sit and sleep on Bitcoin? And this is where we fit in. And it's going to look different than, and there's going to be less debate later on sidechain versus L2 versus, because when BitVM will come in and other application will come, we are just in the I think everybody have seen that graph, I hope. The graph that shows the internet adoption versus the Bitcoin adoption. And literally, we are just in 1998. And Google comes up, just to let you know, Google comes up in 1998 almost. It means we are very recent on this. And in my view, I think it's going to be more emphasis on satisfying different heterogeneous investors to earn some sustainable yield in L2, rather than congesting the L1 with a lot of application that has no real value or real worth. But that's my opinion. Yeah. And I know many people will be angry at me because but also it shows my age. I'm not too much into gaming and not too much into this. Maybe that's another reason.
Look, if nobody's getting angry at your opinions, I think, you need to think a bit more outside the box. So I think that's totally fine. I think super interesting, great points. I think it's undeniable that Bitcoin has been used as a store of value, and people are requiring more ways to use that Bitcoin to get some yield out of that Bitcoin. They've been seeking that out in Ethereum with Rat Bitcoin, and but that's taking on a lot of risk. So I think there will be there is demand for ways to earn yield on Bitcoin, and if they can do that in layer 1 and in a secure layer 2, I think that solves a very important use case. So we'll be excited to see how Code Network develops, excited to see the phase 0, phase 1, testnet launch coming up, all the sequencer competition. So yeah, fascinating to hear all about it. Thank you so much for joining me.
Thank you very much. Appreciate it. And I hope we added some value to your listeners. And sorry if I made anybody angry.
Oh no, don't be sorry. That's the best
There's
part.
There's a lot of belief in this, and I'm mindful that I may hurt some feelings.
It's all good. Thanks again.